My name again, it's Mark Klein. I'm Managing Director of Lender Accounts. I wear a lot of hats at EXIM Bank at the present time. In addition to that, I'm the Acting Vice President of Sales and Channel Marketing. That's how I work closely with Leo and Ben. I like to, whenever I do these, whether it's a webinar or an in-person seminar, I always work off of the assumption, and I'm right 99.9% of the time, that most of the attendees have never heard of the Export-Import Bank of the United States before. EXIM, as we like to call it, because frankly, our full name is kind of a mouthful. So I like to do a little bit, just a quick little overview before I really get into the weeds of who EXIM is, what we do. So the first thing is that I like to, we are a government agency. We are what's known as an export credit agency, or ECA, is typically what we're is what the export credit agencies go by. There's about 110 of those globally. Developed countries have a version of Exim Bank. Developing countries have versions of Exim Bank. What do we call them now? The frontier countries, they have Exim Banks. If you're, our friends to the north in Canada, they have EDC, Export Development Canada, is their Exim Bank. Our friends across the pond in the UK, they have UK Export Finance, or UKEF, is what we like to abbreviate them. Italy, you have SACE. Germany, our friends Hermes. So there's a lot of ECAs, and basically our mission mirrors their mission, and it's to push US made stuff and services. So you're going to hear me talk about that a couple of times during this when we talk about content and we talk about, what's critical, what's eligible. We like to support the stuff that's made in the US, the services that are developed in the US, and in the process, create US jobs. So our tagline, since we were founded in 1934, so we're in our 91st year. There again, nobody's ever heard of us before. We've been around a really long time. Our motto has always been jobs through exports. We are a DC-based agency. We are right across the street from the White House, right there by Lafayette Park. We have some regional offices. In total, we have about 300 people on our payroll. So as far as government agency goes, we are minute. We are itty bitty. One of the reasons no one's ever heard of us before. So we're a very small government agency. About 285-ish of those folks based right there in DC. And then we have maybe 15 to 20 of us that are scattered out amongst the regions. I'm actually talking to you today from my home office in Louisville, Kentucky. So that's where I'm based out of. You're going to hear me kind of talk about this a couple times throughout this webinar. How can Exim help? What's Exim's real products? And on this slide, that's 1, 2, and 3. Those are my core products. You'll hear me refer to our core products a couple of times. First core product is foreign accounts receivable insurance. The idea that you're going to be selling on credit terms to a buyer outside of the US, more flexible than cash up front, more flexible than a letter of credit. You're going to extend them credit. I'm going to put insurance in place to make sure that you get paid. So that's core product number one. Number two is what we call our working capital guarantee program. We work with your bank. We don't try to knock your bank out of the way. We work with them, we supplement what they're doing, and we can provide a guarantee. Your lender is still going to be providing that line of credit. We're just going to put a guarantee in place. Very similar, if you all are familiar with the way the SBA works, very similar to that. The lenders do what they do. They extend the line of credit. They manage the loan. They monitor the loan. They collect the financials. We just put a guarantee in place. Kind of helps them get the credit across the finish line, I like to say. Third core product is our capital equipment foreign buyer financing. So if you're a manufacturer of capital equipment type stuff, you're selling to an end user and they're looking for financing a little bit better than what maybe they can get at their home banks. If you think about some of the markets where this particular core product is very popular, Latin America, Eastern Europe, Africa, parts of the Middle East, not a lot of liquidity in the banks there for the most part. We can come in and put a loan together. We can structure a loan that is much better than what they can obtain in country. Kind of like when you go to buy a truck at the dealership. A lot of times, the financing that that dealership can provide to you, whether it's through, a captive, whether it's through Ford Motor Credit, Toyota Motor Credit, Chrysler Credit, a lot of times they can provide a financing solution to you that may be better than what you can get at your bank or your credit union. But more importantly, man, is it easy. You walk in, you buy the car, and they walk you over to the F&I guy. He figures out the financing. It's one-stop shopping. That's kind of what this is when we talk about, exporters of capital equipment. The fourth button, I'm going to call that our new stuff. And we have a couple programs that I'm going to talk about that's our new stuff. I'm going to do that near the end and kind of dig into that a little bit. We are going to have ample time for questions and answers. You are not going to have to worry about me blabbering for the full hour. We're probably going to go about 40 minutes, and then we'll have plenty of time for Q&A. I want you guys to take, if there's one thing that you remember from this webinar today, it's this particular slide right here. It's our country limitation schedule. If you go to www.exim.gov, it's under resources, country limitation schedule. It is a list of every single country that you could dream of exporting to. And in a couple clicks, you're going to be able to determine whether EXIM Bank is open in that market or are we closed in that market. And if we're closed in that market, that's when that little light ought to start blinking in the corner of your eye that says, be careful. Because if the US government, if we are closed in a market, typically we close for two reasons. First one is the State Department tells us to. That's North Korea, that's Cuba, that's Syria. The State Department says there's significant human rights violations in those markets. EXIM, you got to stay out of there. That's one reason you'll see us closed. Another reason is for credit reasons. Argentina is a good example. Argentina is getting a lot better, but at the present time, we're closed. Not because the State Department tells us to, it's because we can't get comfortable with the credit profile of either the government or the private sector buyers in those markets. So Argentina, Venezuela, Haiti, there's a number of places that we're closed. I always say there again, the reason I like this tool is that if you're at a trade show. I love going to trade shows. If you're at a trade show and someone comes up to you from a market, a little bit questionable, you've never done business there before, just a couple clicks on our country limitation schedule kind of points you in the right direction. What kind of conversation should I have with these guys? Is this going to be a cash up front, cash in advance, or a letter of credit customer, or is this someone that I might be able to entertain credit terms with? So that's our country limitation schedule. We are the government, so we abbreviate everything. We call that our CLS. So that's our CLS. Eligibility, I like to always kind of go over this right up front before we dig into the products. There again, first line on this. Products must be shipped from the U.S., final assembly in the U.S., and get me, for the most part, over 50% U.S. content on a cost basis. I don't care if some of the little rubber buttons come from Malaysia. I don't care if some of the actuators come from the Scandinavian countries. I don't care if the pumps are coming from Germany, as long as they come into the U.S., final assembled in the U.S., shipped from the U.S., and on a cost basis, including labor, U.S. parts and material, research, overhead, R&D, all that good stuff. If you get me over 50% U.S. content, you're going to be just fine. So we're not getting so granular to say that everything has to come from the U.S. We allow a pretty good leeway as far as with 50% U.S. content. 3-year operating history, we can come off of that a little bit. If, for my insurance program, if you can show revenue from operations for at least 12 to 18 months, let's talk. We're not necessarily going to hold you to that 3-year operating history. Now I'm going to talk about our working capital guarantee, where we're going to be working with the banks. Banks typically like to see that 3 years of performance. But for the insurance side, and I'll kind of explain that a little bit more as we get into it, we're not going to hold you to that 3 years operating history. Got to have a DUNS number. I think most companies do. That's pretty easy. A new thing that's been out for a couple years is called the UEI. It's the DUNS number on steroids. It's the government version of the DUNS number. So if you're going to be doing business with the U.S. government, if you're going to be obtaining foreign accounts receivable insurance through me, if you're going to be maybe selling to one of the divisions of the U.S. government, if you're going to be purchasing from the U.S. government, typically they're going to get a UEI number. And that's something, at least in our world, I have a team in DC that will help you go through sam.gov is where this lives, and they will help you get your UEI number. And it's just the best way to describe it. Just think of it as the DUNS number on steroids. Um, and then we'll talk more about this. The last point on this, we'll talk more about that Make More in America. There again, we abbreviate everything. MMIA, I'll explain what that export nexus, what that bullet point means when I get to that program. So circling back to one of those first slides, how can I help you? Export credit insurance. I like calling it foreign accounts receivable insurance. That's pretty straightforward. Working capital loan guarantee. I'm going to talk about that. Medium financing, long-term financing. We like to name things in the government, just doesn't always explain exactly what they do. So medium and long-term insurance and loan guarantees, capital equipment financing for foreign buyers. That's all I want you to think that is. Capital equipment financing for foreign buyers. And then the Make More in America program, which I'm going to touch on that in a little bit. Export credit insurance or foreign accounts receivable insurance, that is 100% our bread and butter. We do this more than anything else. There's different carriers of foreign accounts receivable insurance out there. There's about 35 carriers, both public and private. We're the government flavor. And the idea is we want you to be able to offer credit terms to your customers a little bit friendlier than cash up front, a little bit friendlier than letters of credit. I've been with EXIM for 15 years, but I'm a recovering letter of credit and foreign exchange banker. I know letters and credit. I don't mind letters of credit. In fact, I like letters of credit. Most people think I'm completely insane when I say that. But that's what I did for 10 years was LCs. They work, they're great. Takes a little bit of knowledge both on the US supplier side as well as the purchaser side. There's some complications, there's some costs, there's some capital requirements on the buyer side. So if you can offer 60, 90, 120-day credit terms to a customer, that's a little bit friendlier than cash up front. Most US companies, when we're talking about exports, they want cash up front. They do not want to put that product on a boat and hope that they see payment in 60 to 90 days when they have lost all control over those goods. So our insurance steps into place. And the idea behind the insurance is you call to me and you say, Mark, got some buyers. I might have one buyer. I might have a portfolio of buyers. It could be a brand new buyer that I've never dealt business with before. Mark, I would like to look at maybe insuring this. We're going to collect information on that buyer. We're going to make sure they're credit worthy. We're going to go back to that CLS, right? I'm going to make sure that we're open in that market. And then we're going to vet that buyer and determine that they have a reasonable assurance of repayment. We put insurance in place, and it's going to provide 90 to 95% protection to you. So whatever's owed to you at the time of shipment, you have insurance through me. The buyer doesn't pay, you're going to file a claim with me, and depending upon the type of policy you have, 90 to 95% coverage. So you're transferring all but 5 to 10% of your risk over to the US government. And that typically, you can think about that as a risk mitigation tool. You can think of that as a sales tool. There again, hey, this is a new guy I just met at a trade show, and we can immediately start talking credit terms, and we don't have to do that cash in advance for the first few transactions or the first few months. We can immediately talk credit terms. The third point on this slide that's really crucial is foreign accounts receivable. If you have a borrowing base with your bank, they do not like foreign accounts receivable. They will exclude those from your borrowing base. They will not let you borrow against foreign accounts receivable the way they do domestic accounts receivable, unless I insure them. Once I put my insurance in place and through a procedure called assignment, they can take ownership of that foreign account receivable. They will treat it just like a domestic account receivable. They'll provide the 80-85% advance rate you enjoy on your domestic receivable, because through my insurance, I've turned that from an Egyptian buyer foreign account receivable to a U.S. government domestic receivable. And banks will typically advance against those all day long. Just a little case study that's in here, and we could throw out dozens and dozens of case studies, but this is a company based out of Texas. They wanted to grow their exports. They also knew that about with ensuring their foreign accounts receivable, it opens up more working capital for them because their banks will include those in the borrowing base. So they reached out to one of our brokers. All of my policies on the foreign accounts receivable, this export credit insurance, I make sure that you get in one of my broker's hands. My broker, it's tough to be an EXIM broker. You got to know what you're doing. And we want you to work with one of our brokers because they're hand holders. They're going to help you with that initial application. They're going to help you vet the buyer. They're going to make sure that once you have a policy in place, that you manage it properly, that you don't do something that's going to get you in trouble. If there's a claim that you have to file, they hold your hand through the claim process. So this particular success story kind of points out J. Maxine Roy, individual from that, actually spoke with me. We were on a panel at our last annual conference in April. Great broker. There again, it's tough to be an EXIM broker. We kind of we hold it to pretty high standards. And these are typically, this isn't your property and casualty insurance, folks. These are trade credit insurance specialists. It's a very niche product. They know what they're doing. And they can help you with an EXIM policy. They can also, and remember I told there's 35 carriers for foreign accounts receivable insurance. We're typically more on the small business friendly side. There is a time based on your amount of exports and your revenue to where the private sector will actually start looking at your opportunity with a little bit more favorable than if you're a small business, that this is your very first export sale and you're still trying to figure it out. Private sector insurance, they're usually not too friendly with those. But eventually, after you've been doing this a while and your numbers are good, that broker can kind of dip their toe into the private sector a little bit. They're not going to hurt my feelings if you had an EXIM policy for 3 or 4 years and they think this would be a good time to see if there's a better deal out there in the private sector, that's fine. They will do that. That's part of what they're supposed to do. So little success story. There's plenty more that we could talk to about that. Working capital guarantee. This is my bank product. This is where you go to your bank and you've ideally already have a relationship with them supporting your domestic sales, but you're looking to grow your availability for exports. And I always say that when I'm talking with a lender, you have plan A, plan B, plan C. Plan A is you're a bank, figure it out. Figure out how you're going to support this customer without the federal government sticking their nose in. Plan B is that foreign accounts receivable insurance I just talked about. We put insurance in place. The lender takes assignment of those receivables. They fold that into your domestic borrowing base, and that gets you where you need to be. Plan C is this working capital guarantee. Plan B, we've got the insurance in place. The receivables are included, but we're still needing to get a little bit higher of a number. So through this working capital guarantee, The bank is going to, we like to say, carve out in the banker world. They're going to carve out an export line of credit to you. I'm going to provide a 90% principal and interest guarantee to them. And in return, they're going to provide higher advance rates. That's where that availability comes into play. 75% on raw materials, 75% on work in process, 75% on finished goods, and 90% advance rate on those foreign accounts receivable. And for a lot of the companies that I work with, that 75% advance rate on WIP is the game changer, because most banks do not like lending against stuff that is half finished sitting on a production line somewhere. They don't like that. But our 75% advance rate. So I've got companies that, that it takes them 6 to 8 months to produce a small aircraft, to produce a drone, to make a, packaging system. It's going to be on the production line for a while. They like to be able to borrow against that work in process to help fund production. And that's where we step in. We work with the bank. We have delegated lenders, about 52, 53 of them. And all that basically means is that we have assigned limits to those lenders. To where if you go to one of our lenders and the amount that you need in working capital is within their limit, within their delegated authority limit, they're going to be able to close that loan really quick, because all they're going to do is they're going to underwrite it in-house and rubber stamp it with the EXIM seal of approval at the end of the day. If it's above their limit, or if you're working with a new lender to our program that we have an assigned delegated authority to, not the end of the world. They're going to underwrite it, and then they're going to ask us to check their math. It doesn't take long for us to check their math. So not as quick as working within delegated authority. There again, not the end of the world. Typically, I say that a bank, from the time that they start on putting together a line of credit, they can usually close it within 30 days. I'm maybe going to add, if you're working outside of delegated authority, I'm maybe going to add 15 to 20 days to it, tops. Typically not even that much, because we do everything electronically now through our loan management system. We do e-docs, so it's not a matter of where it used to be the paper, to where we'd have to, they would write up their credit package, send it to us, and then we would have to review it. A lot of times we're working on that credit package simultaneously with the lender. That's the working capital guarantee program. Medium-term financing. Here's that one. This is your foreign buyer, capital equipment financing. This is the idea, planes, trains, cranes, lifts, you name it. Magic number is usually about 500,000 is where this, if you have a piece of equipment that's 500,000 and up, this is where this becomes really attractive, because we typically do not lend money directly. I have lenders that we work with. They're going to provide the financing to that foreign buyer. I give a 100% principal and interest guarantee to that lender to do this. That's the magic right there, because now that loan is going to be priced at 100% U.S. government, AAA rated. At least I think we're still AAA rated. AAA rated risk, which is going to be a lot better than Brazilian foreign buyer risk, or Mexican foreign buyer risk, or Nigerian foreign buyer risk. So the interest rate working through us is going to be much more favorable to that company that's looking to buy your product. Typically, we can offer longer terms. In a lot of markets, I throw out Brazil again, interest rates in the high teens and not a lot of liquidity. So they're going to, if a buyer goes to Banco do Brasil to buy, to get financing for a crane, Banco do Brasil, they'll go through their due diligence and they'll put together and say, yep, we can, provide this financing to you. It's going to be 18.75%. And we're going to put that on an 18-month amortization, because we need to get paid back pretty quick. I can put together a solution, same buyer, same scenario. My interest rate's going to be below 8, and I can look at 5 to 7 year terms. So suddenly that semi-annual payment on 7.5% instead of 18.75% on my 5 to 7 years looks a whole lot easier than that, 18-month amortization. So, This I could do, and I typically have done, I could do a webinar just specifically getting into the nuts and bolts of this. But for the most part, foreign buyers going to pay you 15% minimum at some point pre-export. That remaining 85% is what that bank, the US bank, could be PNC, could be Wells Fargo, you name the bank. They're going to provide the financing with my 100% guarantee in place. And then what's left is a low interest, nice tenor loan between the bank, your buyer, and I just stand in the background with a guarantee in place just to make everybody feel better. You see a point on there. There's a local cost. Um, you're providing a material handling system or a water purification system. That's what you're exporting. But typically, there's going to be some site prep. That company that's buying that, they got to pour some concrete. They got to, they got to run some plumbing. They got to run some electric. They might have to build a roof over this thing. There's a lot of what we call local costs. You're not going to export, your guys down there to help, plumbers and electricians. You're not going to export concrete and rebar. Those are going to be local costs. And we allow up to 50% of the contract, your contract, up to 50% in addition to that in local costs. Local labor, import taxes, uh, tariffs, duties, logistics, all those local costs that are outside of the U.S. equipment, we can wrap that into the financing. So if it's $1 million piece of equipment, that's 500,000 in local cost that we can include in the financing package. I think my next slide here, yeah, it just kind of echoes on that to where there's EXIM, there's the financial institution. They're the ones that's the lender. You got a foreign buyer, and they got you. The nice thing about this, and this is probably the most important part about this program, is you get paid at the time of shipment. So you're going to get your 15% down some point pre-export. At the time you ship, and you can provide that financial institution, that bank that's providing the financing, you're going to give them the invoice, packing list, purchase order, ocean bill of lading, or airway bill if you're putting it in the belly of a UPS jet. You're going to provide those documents to the bank. They're going to check, and once those documents are in compliance, you get paid. So you get paid at shipment. You're done. You're off to the next project. You've been paid in full as soon as that equipment gets loaded on a boat. So it's a cash flow tool. Not only are you providing a financing solution to your buyer that is better than what they could obtain in market, but you're also improving your cash flow. And you can collect if it makes more sense for you to collect more than 15% down payment, we can work that into it. We can build a structure in the financing. If you need to draw against this financing for production cost along the way, we can work on that. So there's a lot of flexibility as far as what ultimately this financing structure looks like. The important thing to remember is get me above 500,000. Make sure you're selling directly to the end user that's going to take your equipment, put it into production. If it's a, if it's a lift truck or a crane, maybe they're going to put it into their rental fleet. But if they're maintaining ownership, this is a really good solution. Be happy to talk more about that with you. Um, so this is that. Remember that fourth button that I talked about, the new stuff? This is one of the new stuff. This is our Make More in America program. It's been around for 3 years. And without going, a lot of words on the next couple slides because we'll provide these slides to you. I'm not so much of a slide reader when I do this. But the idea to Make More in America 3 years ago is everything in our 91-year history, well, at that point, 88-year history, was all about the stuff and the services to be exported. We never addressed the million-dollar question of what do U.S. companies need here infrastructure-wise to build the stuff and develop the services to be exported. That's what this Make More in America is. At the present time, it is a direct loan. Unlike the guaranteed loans that I talked about previously, this is actually a direct loan for EXIM to help you build a factory, if you will, property, plant, and equipment financing to make stuff to be exported. So it could be land, could be building, could be the equipment, basically the stuff that you need to have here to make the products to be exported. Let's make more in America in a nutshell. That export nexus that was on the slide, we'd like to see at least 25% of what my financing is going to help you produce. We like to see 25% of that be exported. I can go as low as 15% in certain circumstances. I'm going to talk about one of those circumstances next. But the target, 25% exports. We are an export credit agency after the way, so still jobs through exports. So 25% to be exported. We love to hear about the jobs. We want to see a calculation from you as far as how many new jobs will be created, how many existing jobs will be sustained based on this. Um, Other questions that we talk about during the underwriting, what's your capital stack look like? What other means of financing have you obtained? What's your financials look like? We have, under this program, we're up to about 8 or 9 approvals. We've got more in the pipeline. We have looked at some that have been very early stage, and that's usually something that we haven't done in the past. But really looking at some early stage companies, um, that's when you get into your offtake agreements. You haven't really been doing a whole lot. You've got the proven concept. You're now moving to some type of a commercial production model. Show me the offtake agreements. Who has gone on the record, either contracts, letters of interest, MOUs, memorandums of understanding, who has said, hey guys, if you build this, we're going to buy it from you. So I always like to look at those offtake agreements. So that's Make More in America. Um, since it is kind of a new program, you'll see press releases come out. We just did one for press release for a company up in New York called Empire State Mining, Titan Mining. They were going to develop their processing. I think they've got two concepts. I think this first bit of financing we did for them was for graphite, and then I think the next one is going to be zinc. They're again not sharing anything that's not already out there in a press release. But if you ever see press release about our Make More in America or MMIA, that's what we're talking about. It's domestic financing. The next one that I want to talk about, this is CTEP. Not really a program, but in 2019, we have to go through what's called a reauthorization process. And part of that reauthorization is they tweak the rules a little bit. And when I say they, Congress tweaks the rules a little bit. One of the things that they added in 2019 was this China Transformational Export Program. There again, CTEP, we abbreviate everything. And the idea behind this was Congress saying, EXIM Bank, do something about China. There's ECAs in China, there's about 5 or 6 of them, and they are providing financing all over the world at a crazy clip. They're doing a whole lot more than we do. And basically, CTEP was EXIM. We know that you have some limitations, but please, can you step up and provide some type of a financing solution, some type of a flexibility in your financing to help combat China? So here's what that flexibility looks like in the CTEP. These are what we call the transformational exports. I'm not going to read these through. Um, and this is not an inclusive list. I've seen some, agriculture is not on here as of yet, but we've done some, if you're CTEP qualified, that's one of the things to where that's what drops you from that export nexus of 25% down to 15%. It does allow, if you're CTEP qualified, basically what that means is that we know that you're competing with China. So we're going to try to build flexibility into our financing offer to try to combat what your competition in China is doing. Um, so we can kind of come off that U.S. content a little bit if needed in these particular industries that I have listed here and some that aren't necessarily listed here. But that's what I want you. If you ever hear CTEP, in relation to EXIM, flexibility. It just means that we know what you're going through in competing with China, and we want to do everything in our power, in our financing power, to provide some type of a solution so you can win that business. And that was Congress ask of us was EXIM, do something about China. And that's what we came up with was the Chinese Transformational Export or the CTEP program. Um, this is the really new thing that we're doing. Supply Chain Resiliency Initiative. This is mining sector. So with the folks in this particular virtual room, I'm not gonna. I just want you to know that when you see press releases about this, um, this is basically so the Make More in America that I talked about, the MMIA, that's for U.S. based entities. Could be mining, could be like my Empire State Mines that they got financing to help them increase their graphite production, their graphite exports. Um, the supply chain resiliency is basically that make more in America concept, except it's for foreign buyers. So this is that mining operation in the Congo, and they are going to start processing more cobalt. And we've identified there's a list. It's out on the website. I think it's I don't even know who maintains the list, but you can go out there and just Google list of rare earth or critical minerals, and there's a list of them. And basically, the Supply Chain Resiliency Initiative is the idea that we're relying on China too daggone much for some of these rare earth and critical minerals. We don't like relying on China. We don't like our manufacturers to be tied to China. So the Supply Chain Resiliency Initiative gives us a means to when that processing site in Congo says, "Hey, look, we can get more cobalt out of the ground than what we are right now. We just need to we need some help, with our processing facility." We can provide that financing based on offtake agreements. So we call this offtake agreement financing. It's basically you show us an offtake agreement to where you pledge, contract that the cobalt that you're pulling out of the ground and processing, you're going to sell that back to the U.S. We can provide financing based on that offtake agreement. And that's how we determine how much financing we're going to provide is based on that offtake agreement. So if the company, if it's to use nice round numbers, um, they need 100 million bucks to get their cobalt production to where they want it to be. And they estimate that 75% of that cobalt is going to be sold to the US. We tie it down with a contract agreement. We would then be able to provide financing for 75 million of that 100 million that they need based on the fact that they're going to be selling, 75% of the production back to the US. We did this, it's offtake agreement financing. We did this back at the very beginning of the Cold War, right after World War II, to where at that point in time, pretty much all the uranium in the world was coming out of Kazakhstan. And that's where we were getting our uranium. Well, Russia, knowing that we were using that uranium to build bombs that were pointed at them, I can't blame them for doing this. They shut off. They said, Kazakhstan, no more exports of uranium to the US. They're building stuff, they're pointing it at us. We need to stop. So our uranium supply dried up. So at that point in time, this would have been the late 40s, early 50s, we did offtake agreement financing solely for uranium. So if there was a country, there was a production, they knew where the uranium was, they were going to mine it, they were going to process it through an offtake agreement. Coming back to the US, we helped finance the production of their uranium, knowing that it was going to come back to us via offtake. So it's a new product. We haven't done it in 50 years. We just dusted off the old offtake agreement financing we did in the 40s and 50s, and we've created Supply Chain Resiliency Initiative, not necessarily for uranium. It does count. That's a rare earth critical mineral, but it's the zinc, the cobalt, the graphite, the antimony, all those things that are way down on the periodic table that you learned about in chemistry class. Um, I'm not exactly sure what half of them do. I think there's a lot of them goes into the magnet space. But that's just it's supply chain resilient. It's that rare earth critical mineral financing. Um, an advertisement for other folks other than EXIM out there. Um, U.S. commercial service, to where EXIM is kind of the money guy. We're the financing people. The U.S. commercial service is kind of the marketing folks. Highly encourage you to reach out to them. If you need to know who to reach out to, we can provide that to you. But they come before us in the fact that you go to them and basically say, look, I've got this product. I think it has some real live export potential. Can you help me find a market? And they will go out there and they have tools to determine which country would be a really good place to start for your product. And then taking a step further through their what they call a gold key program, they can actually put you in contact with the folks that have a really good reputation for being a distributor of your product in country. They work closely with the embassies. There's usually folks with the U.S. Commercial Service or ITA, International Trade Administration, housed in these foreign embassies. So they help you vet those distributors and potential foreign buyers. Of course, the SBA, we all know about the SBA. They're our friendly cousin. We play very nice with the SBA. They have a working capital loan guarantee, very similar to ours. Um, so there's sometimes where a lender will approach me and the SBA and basically get us on a call and say, okay, which program is going to be the best for my exporter? I can't, I have content restrictions. We talked about that. The SBA does not. I cannot do military. The SBA can. Um, the SBA can't go above 5 million. I can do any size. So there's different little quirks that will point either to where EXIM is going to be the best fit or the SBA is going to be a best fit. At the end of the day, you don't care. And your lender doesn't care because both the SBA and the EXIM, it's going to be a 90% principal and interest guarantee. The structure is very similar. The advance rates are very similar. So you're going to get your money. The bank's going to get their 90% guarantee. So whether it's an SBA guarantee loan or an EXIM guarantee loan, at the end of the day, it just doesn't matter. Here's the QR code. If you do this, I don't know if it's going to pull into my queue, Ben's queue, Leo's queue. It's okay with Exim. We're a small agency. We can get you where you need to be. No worries there. I'm going to trust this works. I still have troubles with the QR codes at the restaurants when instead of a menu, they give you a QR code and you have to turn your phone up to it. I still struggle with that sometimes. But feel free to reach out to us. More than happy to help. Um, that's me. There's my contact information. I'll leave that up for a minute. Ben Todd. Um, Best way to determine, from the get-go, who should I talk to? I handle transactions that kind of are U.S. exporter centric. So when a U.S. exporter comes to me and says, Mark, I have this product, I have a buyer in Brazil, I would like to obtain financing for him. That comes to me. Ben does the exact opposite. He's got a buyer in Brazil. They want to buy from the US. They want to see what type of financing is available. They haven't identified their US supplier yet. They just want to know that once they choose that US supplier, that there's financing available to them. That's what Ben does. Um, I think that the rest of the slides, Catherine, are just kind of, yeah, these things. So I'm going to leave my contact information up there so everybody can get that. I think I hit the wrong button. Typically I do. So maybe my best plan of trying to, there we go. I can get to it now. There we go. So I'm going to go. This is Q&A time. As promised, 15 minutes, ready to go. Please fire away.
Yeah, thank you, Mark. And really quick, we just have a poll. If you would like XM to contact you, you can just respond and I'll pass along the information. So I'm going to leave that up. But we do have two questions so far. So first, the U.S. bank has previously disallowed U.S. government receivables due to the arduous process with needing to comply with the Federal Assignment of Claims Act. Can you speak to that?
Yeah, it sounds a lot worse than it is. Um, some banks, not many, um, even when with an assignment from an EXIM policy, they will shy away from providing an advance rate. And the basic reason is that through that assignment, our assignment is what we call restricted, which means that the exporter is always going to be involved. The lender under my assignment cannot file a claim on behalf of the exporter. And a lot of banks, they like to be in the driver's seat. They like to be able to, with the, if they've already provided an advance or a receivable, they want to be the one that determines when that claim gets filed. Under my program, you can't do that. Under the private sector program, some of those private sector companies that they have a little bit friendlier assignment. So I think that answers the question as to why some banks may say, you know what, we would prefer that you go to Euler Hermes or Atradius or Coface or FCIA and get the foreign accounts receivable insurance because their assignment policy is a little bit lender friendlier than Exim.
Okay. And then the next question, can the programs like medium-term financing be used for USED planes, cranes, and trains?
Yes, absolutely. So yeah, just just think of anything that there again, capital equipment, planes, trains, cranes, pumps, you name it. If it's falls into that equipment category over $500,000, you're selling to the end user, not to a wholesaler that's gonna resell it. But yeah, that's exactly what that program is for.
Okay. If the US company is trading internationally, but products are manufactured outside and also the customers in a third country, does the Exim Bank help with the credit insurance?
That's where, if I'm understanding the question correctly, production has to take place in the U.S., U.S. labor being involved, final assembly in the U.S., final shipment from the U.S. So we don't allow for any further production to take place. So one of the things that we're running into right now, I hope to change it. We've been trying to change this, is a lot of companies they do the bulk of the assembly here in the US, but that final coat of paint, that final packaging takes place across the border in Mexico and then eventually goes into Latin America. Under my current model, even though that is very, very light assembly that is taking place across the border, that would not qualify for EXIM support because final assembly is not taking place in the US. So production outside of the US can't do that. Um, let's say that the production is from the US and it's being sold through a sales office in the UK or a sales office in Germany or a sales office in Singapore. That's okay if the sale is generated outside of the US, providing that that finished good ships from the US, goes to a warehouse in Singapore, and is then sold from there. As long as there's no more assembly taking place in Singapore, that would count. But yeah, production outside the US, that's real tricky for us.
Okay, and then next question, if I have a customer or buyer who currently requires advance payment terms, what is the length of time to determine if Exim approves the buyer for their financing terms?
Yeah, it's pretty, we can turn these around pretty quick. I usually, first thing you're going to do is you're going to call me. Second thing, we're going to loop in a broker. That broker is going to help you collect what information we need from the buyer. And how deep we dig on that buyer is determined by the amount of credit you want to extend to them. We may just need an international credit report. We may just need trade references. We may need their financial statements if they're looking for a significant line of credit. But usually we can turn around a go, no go decision. Give us 10 business days is usually what it takes from the time that we get all the information we need, a completed application on that buyer, usually within 10 business days. we can tell you whether or not they're a good credit risk.
Awesome, thank you. Any other questions? Okay, I'm not seeing any other questions, but if you think of any, there's Mark's contact information again, or feel free to reach out to me and I can pass along your question. But thank you again, Mark. Thank you so much. And
Oh,
thank you
thank you
all
guys.
for
I've
joining
enjoyed
us.
it. And please feel free to reach out to me or Ben or Leo.